So let's open the noon business lunch. Our first segment, our open, is always sponsored by JT Medicare Solutions. Medicare open enrollment is happening now. Craig Bolanos is the co-founder and wealth advisor at VestGen Wealth Partners. Craig, what's the number you want to start with today? I've got a bunch of data in front of me. Where do we begin?
Well, I think we got to begin talking about that CPI report. But overall, John, how am I feeling about October? It feels a lot less trick and a lot more treat, and that's making me smile.
Well, is it September or October that is historically a bad month?
You know what? September usually does not bring in the rose garden. September is usually a more difficult month than people realize. But, John, you know what's exciting? The fourth quarter since 1950 is positive 80% of the time, but better yet, whenever you close out September being up 10% or more for the year, the fourth quarter's up 93% of the time with an average gain of 6.1%. That puts history on the side of most 401k investors right now.
Why did the market jump today?
Well, I think everybody knows, even though 3% inflation is still way too hot, it's nowhere close to the 2% Fed target. And I'm sure there's going to be a lot of people out there on Social Security who say, wait, the fix is in. I'm getting a 2.8% COLA for Social Security, yet we just printed inflation data that's 3. Doesn't seem fair to me. More on that in a minute. But I really just think we have good momentum right now going into the end of the year. That should be positive. And if you dive into some of these CPI numbers, the shelter costs are starting to get cheaper. They're coming down. That's what we've all been waiting for. Puts a smile on the face and causes the stock market rally.
Rents are going down or mortgages are going down?
Well, I think, speaking of mortgages, John, I had to pinch myself today because I saw a 10-year treasury. That's a 10-year treasury, which is something that mortgage rates take their cue from. Yeah. And we broke the 4 number. We're at 3.99. That's better than the 4.1 we were hanging at. So this is good news for every mortgage broker who's looking to get a Q4 bonus.
Yeah, I touched 3.99 a few weeks ago. I forget what the announcement was that predicated that. It might have been a Fed dip, but then it jumped back up over 4. You think we're going to stay below 4, Craig?
You know, I've been very sanguine. I've been very nervous because of the mass amount of debt that the United States is carrying because of some concept of this de-dollarization around the world. I've been worried that the Fed was in a pickle. The Fed was in a conundrum, that they could be lowering Fed funds rates, yet we could somehow see that 10-year Treasury climb. At least right now, I'll be going into Saturday, all smiles on my face. I think we're kind of firmly anchored plus or minus 4, and that's good because you wouldn't want to see that 10-year number run higher in the face of the Fed cutting rates. That would be indicative that things are losing control, and that is not where we're at today.
So is this, though, another instance of a little bad news is good news? Inflation is higher than we like, and it's higher than the increased pay that people are going to be getting, and then the market jumps up. Your retirement portfolios took a nice hit today. They went up. But why is it, and is that a good trade for us to be making?
I don't think this is a case of, I don't think this is a case of bad news is good news. I think the trend that's here is, if you think about the bulls, then the bulls are clearly in control of Wall Street right now. Yeah. We have a continued argument backed by momentum, and that momentum is rising GDP, sustained earnings growth, strong consumer spending, even though it's all coming from the high-end consumer. It's not even across America. Mm-hmm. The start of a Fed rate cutting cycle that happened, the rapidly advancing artificial intelligence technology, and don't forget, we're at that point now in October where some of those things from the One Big Beautiful Bill Act, non-taxation of overtime, non-taxation of tip income, all of that is hitting just in time for the holiday season.
That may be the unsung hero in all of this, the big, beautiful bill, but you're not worried that the market is being propelled by the higher end of consumers and that the markets are still up because of the Magnificent Seven and a handful of tech stocks. I mean, it's not everybody that's sharing in the riches.
No, there's a gigantic dispersion in returns between the S&P 500 large companies, the S&P 400 midsize, and the S&P 600 small caps. Large caps are off to the races, due in large part to 5 stocks in the S&P 500, representing 30% of the index. But irrespective of all that, I wish that the spending for consumer safety and consumer sentiment was levelized across this country, because you want to see everybody doing well. I acknowledge the increase in Chapter 7, Chapter 11, and Chapter 13 bankruptcies that have been popping up as late, showing the most vulnerable people are suffering. There's no doubt. But when it comes to Wall Street, they're just concerned with the sales at the end of the day. They'd prefer it was widespread, even though it's not.
Well, there is a difference between Wall Street and Main Street, or whatever street you live on. I'll ask you more about that in a minute. Craig Bolanos, 12:16 on the Noon Business Lunch. And now, how are the markets, Bob Kessler?
They're in positive territory. Dow's up 485.
312.com. Main Street, 312.com. We're talking to Craig Bolanos. Craig, we were just talking a little bit about the inflation. We were talking about the Fed. Where should we pick the conversation up now?
Well, I can't wait for this government to eventually get reopened. I mean, this thing is dragging on, and I hate to say it, it's no end in sight. So I think it's going to be record-breaking when we're done. That 2018-2019 shutdown was nasty. This one's probably going to be a bit longer. And once we get reopened, I wonder if we are, in fact, going to print a 4.5% unemployment rate by the end of the year. That might surprise a bunch of people, and things like that could be the catalyst for that correction we're looking for. Again, the trend is still good, but with some of the asymmetry in the market, you got to plan on a pullback here at some point in time.
And when exactly will that happen? I'd like the date, please.
The date of the pullback or the government reopening? You and everybody else. I don't know. I'd like to know in which year the Bears are finally going to re-win a Super Bowl too, John, although I'm encouraged by what I've seen the last couple of weeks. And I just think people need to take stock going into the end of the year to make sure they're really rebalancing their portfolios, paying attention to their risk budget, and doing something that you have shed light on, how much concentration risk there is in the S&P 500 right now.
Yeah. But all of a sudden you don't sound that bullish. Do you think this is a time to take some money off the table?
I think this is a time for people to be rebalancing. I want people to know that I'm still bullish. I am still optimistic. I think we're still in a business cycle that's going to continue to grow through year-end 25, a business cycle that's going to continue to grow in 26. But my job as a professional is to make sure everybody gets retired and stays retired, and that means you have to have strong rebalancing protocols to not be complacent, not take too much risk. And, John, after all, isn't it better to do some rebalancing while the market's going up instead of doing it on the way down?
Right. Even if though you will miss maybe some better returns because you got out a little early. But I completely understand that. I don't want to say don't be greedy, because it's your money, and if it grows, you're not greedy. You're just smart. But I completely understand the impulse to say, I've got enough money to retire, or I've recouped my losses and then some, so I want to breathe easier. Terry Savage talks about this. It sounds like you are too.
I just think it's common sense. I think it's leaning into that emotional, there's emotions of money. I mean, and if you think about what's the purpose of money? I mean, some people use money as a scorecard. I view money as empowering. It can let us do what we want to do when we want to do it. That means it's about protecting choice. And if I want to protect choice, I want to maintain security. But again, if you are young, just focus on your average rate of return. Put your money in growth. If you're young and you've got decades to go, invest in disruption. Disruption's innovation. But for everybody else who's on the cusp of or already retired, expect the unexpected. Preparedness and flexibility are the hallmark of a good financial plan, and that's why you need to be diversified.
Are you watching the price of groceries and some of the core things that we buy?
I pay attention to a lot of things. And yes, John, surprising to many people, when I'm in Wisconsin, I go to the festival. When I'm here, I still go to the Jewel Osco, and I love the Publix when I'm on the East Coast. And there was a lot of things that cost more than I think they should, including my coffee.
I thought you were going to say including my ground beef and steaks. The president's policies vis-a-vis Argentina, South America, ranchers and farmers in the USA, I wonder what the forecast for food prices is going to be.
You know, I think at the end of the day, especially with the policies that you're referring to, we can talk soybean, talk about all these changes that have happened. There is an underlying embedded cost in all things that you and I associate with the grocery aisle. I do think we need to have policies to protect and reward the American farmer, because the American farmer feeds all of us. If you think about where everything starts, I would like to think it starts right there in America's heartland, and there's some difficult trade negotiations that are happening as we're seeing posturing between the U.S. and China. But isn't it nice that President Trump is getting together with Xi Jinping after the initial cancellation of the meeting? I think that's got people keeping their fingers crossed.
Yeah, you really do have to sort of wonder what's going to happen next, or maybe not take too seriously some of his outbursts. So he's cut off all negotiations with Canada, and they're our number one trading partner, but that was today. Tomorrow, I suspect it's quite possible he'll patch things up. And the market didn't seem too worried about what he said about Canada, did it?
No, I understand people are mad about the online advertisement that they ran, or the commercial, you know, making some rhetoric that President Reagan had said many, many times ago about free and fair trade. But our interests are aligned. That's the issue. With a lot of our trading partners, especially those who are geographically close, there is a lot of underlying interest and common sense. And I always do think when there are grown-ups in the room, common sense eventually prevails. But yes, there are some antics time to time in terms of getting there. Are they antics or are they positioning? I'm going to let the history books judge that along with the voters. For me, I'm just paying attention to the trend, because right now the trend is our friend.
Yeah, sometimes I don't think there are adults in the room. One last thing. What do you think the Fed's going to do for the rest of the year?
Oh, it's really simple. I've talked about it. I mean, gosh, for all year, John, I said I just wanted two things for the holiday season. I said, give me at least 2 rate cuts. If I could get 3, it'd be even better. We got one in September. We're getting one on the 29th of October. We're getting another one on the 10th of December. Boom. That's not 1. That's not 2. That's 3. I think my stocking's going to be full, along with other American citizens.
It's nice to talk to you today, Craig. Thanks for joining us, as always, on the Noon Business Lunch.
Great to be with you, John.
Craig Bolanos is the co-founder and wealth advisor at VestGen Wealth Partners. His website is getretiredstayretired.com.